Sovereign wealth funds, often referred to as SWFs, are big investment funds. They are owned by governments and manage a lot of money. This money comes from a country's reserves, which can come from different sources. One source is selling natural resources like oil. Another source is trade surpluses, which means a country exports more than it imports. SWFs are becoming more important and are big players in global markets. They invest in many different assets, including stocks, bonds, and real estate. The rise of SWFs is changing global finance, and it is important to understand these funds as they have a big impact on the world economy. Sovereign wealth funds have a main goal. They want to grow their country's wealth. They do this by investing in different assets, which can be in any country. SWFs have different reasons for investing. Some want to save money for the future, especially in countries with oil wealth. They know oil will not last forever and want to prepare for the future. Other SWFs aim to stabilize their economies, particularly those from countries with trade surpluses. These countries earn a lot from exports and use SWFs to invest this money wisely. Some SWFs aim to support specific projects such as infrastructure or technology to boost economic growth. SWFs can provide the necessary funding. Overall, SWFs are a tool for governments to achieve economic goals, which can vary from country to country. However, the main idea is to use wealth wisely to create a better future. Sovereign wealth funds are active in global markets, investing in a wide range of assets. These assets include stocks, bonds, real estate, private equity, and hedge funds. SWFs have different investment strategies. Some focus on long-term growth by investing in a diversified portfolio, which helps to manage risk. Other SWFs are more active traders, buying and selling assets more frequently to profit from market movements. This strategy is riskier. The size and influence of SWFs are growing, making them important players in global markets. Their investment decisions can impact asset prices and influence corporate governance. The rise of SWFs has created new challenges. Regulators are working to ensure transparency, prevent market manipulation, and address concerns about national security. Some sovereign wealth funds are incredibly large, managing trillions of dollars in assets. These funds have a significant impact on global markets. One of the largest SWFs is the Norway Government Pension Fund Global, commonly known as the Norwegian Oil Fund. It manages over $1.3 trillion in assets and invests in a wide range of assets globally. Another major player is the China Investment Corporation, established in 2007. It manages over $1 trillion in assets and invests in various sectors including finance, energy, and infrastructure. The Abu Dhabi Investment Authority is another giant SWF known for its secrecy. It manages an estimated $600 billion to $800 billion in assets and invests in a diversified portfolio globally. These are just a few examples of major SWFs. Their size and influence are undeniable, and they will continue to play a significant role in global markets. Section 5. The global impact of SWFs. Sovereign wealth funds have a significant impact on the global economy. Their investment decisions can influence asset prices. They can also affect the flow of capital around the world. SWFs can provide stability to financial markets. They are long-term investors. They are less likely to panic sell during market downturns. This can help to prevent market crashes. However, the growing influence of SWFs also raises concerns. Some worry about a lack of transparency. They argue that SWFs operate in secrecy. This makes it difficult to assess their motives and strategies. Others worry about potential political influence. They fear that SWFs could be used to advance political agendas. This could undermine fair competition and market principles. The global community is grappling with these challenges. There is a need for greater regulation and oversight. This is essential to ensure that SWFs operate responsibly. Section 6. SWFs, Benefits and Boons. Despite the concerns, sovereign wealth funds offer several potential benefits. They can contribute to economic stability and development. They can also provide much-needed investment capital. SWFs can help countries manage their wealth effectively. This is especially important for countries dependent on natural resources. They can use SWFs to invest surplus revenues. This can help to smooth out economic cycles. SWFs can also invest in developing countries. They can provide capital for infrastructure projects and other investments. This can boost economic growth and create jobs. Furthermore, SWFs can promote financial stability. They are long-term investors. They are less likely to engage in speculative trading. This can help to reduce market volatility. Overall, SWFs have the potential to be a positive force in the global economy. However, it is crucial to address the concerns about transparency and governance. Section 7, SWFs, Criticisms and Concerns. Sovereign wealth funds face significant criticism. Main concerns include lack of transparency, political influence, and market distortion. Critics argue SWFs operate with secrecy, making it hard to assess their motives. This opacity creates market uncertainty. Addressing these concerns is crucial. Section 8. The future of SWFs. Sovereign wealth funds are likely to play an even greater role in global markets in the future. As countries continue to accumulate wealth, they will increasingly turn to SWFs to manage and invest their reserves. The growth of SWFs presents both opportunities and challenges. On the one hand, SWFs can provide much-needed investment capital and contribute to global economic stability. On the other hand, their growing influence raises concerns about transparency, governance, and potential market distortions. The future of SWFs will depend on how these challenges are addressed. If SWFs can operate transparently and responsibly, they can become a powerful force for good in the global economy. However, if concerns about their governance and influence are not addressed, they could pose a significant risk to global financial stability. The international community must work together to develop a framework for SWF governance that ensures transparency, accountability, and fairness. This will require a